No, I think that the first topic should be about wine. You have a winery. It's like, so you decided, like a few investors that I know, that it's time to retire, and you open. Is it a winery, or is it, what do you do in the wines exactly?
So what happened is this: about 15 years ago, my wife and I moved. We have 3 children. We moved to a different home, and the home that we bought had a small little hobby vineyard on it. And since I love wine, I figured, how cool would this be? Let's just take this wine, make our own label, make a family wine. I really didn't know what my aspirations were at that point. But I came quickly to realize how much I enjoy the process of winemaking, farming it, harvesting it, turning it into wine. And so we outsource. When you're a small vineyard like me, you outsource to custom crush facilities, and you have parties. I don't have my own vineyard manager. I share them with other people. And then I bought some land around my house, and we planted more vineyards. And then my daughter expressed an interest in it. And then we started buying fruit from Paso Robles and Santa Barbara and Monterey County, and we bring that down and we make wine. So we have a full-fledged winery, which we've run for many, many years. And we've always wanted to open a tasting room, an actual retail shop where people could come in, sample the wines, join a wine club, have some small bites. And we opened that up just last month. And my daughter is running it, and she studied viticulture and winemaking in Northern California, and it's just a wonderful thing to watch your child do something they love, to be able to participate in it because you enjoy it. So I do that as well.
So in InsurTech LA or InsurTech SoCal people, if you're looking for a good wine, you should go to, where should they go?
It's called Aja Vineyards, AJA Vineyards in Santa Monica on 2nd Street. AJA is the acronym for my 3 kids, Alec, Jack, and Amanda.
Love it. That's awesome. And here I am trying to brag about my knowledge and expensive taste, and realizing that I really like everything that comes out only from specific region in Italy, which I don't. Just give me a good wine. I don't care where it comes from. No, I do appreciate that. Although Alto Adige, or whatever it's pronounced, yeah, that's kind of my latest favorite wines. Anything that has some sort of an Austrian name that comes from Italy, apparently they're pretty good. No, they're doing a great job.
I love Italian wines. They're amongst my favorites. So I think you know exactly what you're talking about.
And those are trends. Tomorrow we'll discover a $6 Cabernet from Paso Robles that they sell on Trader Joe, and go like, oh, this is way better.
You're not wrong about that.
Not at all. Listen, we like to be fancy. However, at the end of the day, it's a question of taste. Does it taste good? Do you like it? So that's my kind of like only contribution to wine is, and it's like, oh, this is a Barolo from blah, blah, blah. Oh, 20, that was a good year. Versus like, yeah, no, I like it. It works. It's like, how much? $6.
I'm with you. My favorite white wine, other than my own white wine that I make, is $11 from Costco. So it doesn't matter what it costs. If you like the taste, you like the taste. That's it.
Done. Okay, shall we talk about insurance?
Sure.
Yeah, so let's start with the basic stuff. Input One, payments. What's Input One?
Well, Input One is a digital billing and payment platform currently dedicated to the property casualty industry. We serve carriers, MGAs, and retailers with a variety of our products. Our tech-enabled billing product, which essentially replaces the billing operation of a carrier, provides all the technology and all of the operational elements required to run a billing operation. And we integrate those directly within the core policy systems. We provide a straight forward and simple digital payment platform that can be used by any retailer, carrier, or MGA. And we own a premium finance business. And what we do is we built that all together into a singular platform, allowing any element of the insurance vertical to use any or all of our digital billing or payment services, which will handle all inbound premium elements required by their business.
Okay. That's very straightforward. Done. It was great talking to you. Now, why do we need all of those options, right? What are for the listeners who are less familiar with the payments and the importance of different payment solutions? Why the financing? What's the difference between paying the premiums directly, indirectly, and all that stuff?
Well, it really all depends on the nature of the policyholder, and it depends on the insurance carrier's capital requirements. So in some cases, there are policyholders that just simply don't have the capital to write a check for the premium up front or pay it or digitally, however they choose to do that, in which case they need to spread the installments over time. Oftentimes, it actually makes sense to do so because insurance is a product that you utilize over time. So if you pay for it up front, but then utilize it over time, there's a disconnect between the cash flow connected to the paying of the product and the actual utilization of the product. And there are tax advantages to financing the premium. If you finance premium through your business, you can deduct the interest and so on down the line. But then on the other side, on the carrier side, there are cases where the insurance carrier needs the premium up front. As you know, insurance carriers by and large lose money on the business of insurance, but make it up on the investment portfolio. So if they require, if they're running the business at an underwriting loss, they can make it up with the investment portfolio, and therefore they need the capital up front, and therefore the policyholders can't have no payment plan. So if they find the right product at the right price, but there's no payment plan, how do you solve for that? If the carrier needs the money up front, you finance the premium, right? And then, of course, there's the commissions. Retail agents like to receive their commissions up front. And if you bill the premium over time, more often than not, they're going to get their commissions piecemeal. So there are some brokers that prefer to sell a financed option or get the premium up front so that they can get their commissions up front as opposed to waiting for it over a 7, 8, 9, 10 installment payment plan. So every stakeholder in the insurance vertical has reasons for why they might want to do a pay in full, a financing, or an installment plan.
You know that you're making my life harder now, because ideally I wanted to break it down and then ask you, but the carriers have this incentive and the agents have this incentive, and you already answered most of those things. So, we will need to just dig in and, understand better, because who is selling that? So for you, who is your client? Who is paying you?
Well, all elements of the insurance vertical. So we have a good constituency of our client base that are retail agencies that use our premium finance company and that use our digital payment platform. We have a multitude of MGAs that use our billing platform and our premium finance platform because they might sell multiple products. Some products the carriers allow it to be billed, in which case the MGA will actually do the billing themselves, and they will have us run the billing department for them. And in some cases, the programs that they sell, the carriers need the premiums up front. So we have a financing option. So MGAs are our customers. And we also have insurance carriers for which we do the billing directly for, and we allow the financing for, and we do the digital payments piece. So we have very few of my clients buy one product from me because everything that I sell, every element of the insurance vertical uses. It doesn't matter if you're a carrier or an MGA or a retailer. You're going to need billing, you're going to need financing, you're going to need payments at some level of your business. And so our clients are across all elements of the vertical.
You're making my life harder in terms of asking the follow-up questions. No, but that's also the difference between a big company and a startup that just start and have one feature, one product. With you, we can ask about it, maybe a little bit more about the trade-offs and why would someone use it or versus the other, and different, because there are different solutions out there that provide that. The first name that comes to mind is, of course, a certain company. We're not going to name names, but it's a certain company that starts with the Uno. Let's use that. Uno Firma. How is that different? Because everyone is saying, I have one ring to control them all.
Yeah. Well, listen, there are companies out there that have, we have competitors out there that have very good digital payment platforms, and you just referenced one of them. That company that you referenced in particular focuses primarily on large carriers, right? I mean, I've spoken to them. They're very nice people, very smart people, and I admire what they do. And they focus on the big tier 1 carriers, right? So our focus is more on the smaller carriers. We find that and MGAs. So tier 2 through tier 4 carriers and MGAs, we find that we can have a better impact on that. They need very bespoke solutions. We are very efficient with the manner in which we integrate our systems and deliver our product and implement, so we can do smaller deals. So there is a significant constituency of the marketplace that can utilize our services because they can get in without having to be a massive insurance carrier. We also have competitors that are on the digital payment side that deal directly with retailers. And so we compete head to head with them. And I would say their products and services are fairly comparable to ours, except that what we can do with the retailers, we go in and we say, look, we can finance your premiums and we can offer you digital payments. And when we when you bundle them together, we can give you some price discounts. So because I have multiple arrows in my quiver, I have the ability to provide more affordable solutions. So that's really what it is. I mean, we could still compete. I mean, I can still deliver a product, a digital payment product to a large insurance carrier. but it's not my wheelhouse, right? That's really not where we like to focus. So we think there are thousands, if not tens of thousands, of retail agents and insurance and MGAs and smaller insurance carriers that could utilize our services. And that's where we focus.
Yeah, cool. Now, listen, it's from here, it will be more about, okay, great, wonderful. So what are their challenges? Where are they failing where the bigger carriers at?
Well, are you asking me where the larger ones are failing or the mid-sized ones that I'm serving?
Well, most likely I will need to figure out how to cut myself out in this junction of time. And it will be more about the difference of incentive of using you versus the other, which we kind of covered that. And I'm out of questions or technical question about what we can do with you. But it will be more about this, the market. And, let's look at the agents. What is the motivation of agents to use your solution, and what type of agents? Are we talking about smaller one, the bigger brokerages, the mine shop? Most of them will be, they will have a few appointments. They will follow whatever the carrier has to do for them. Are they using you directly? How does it work?
From a retail agency perspective, we have very small agencies, some of them very small state farm agencies that will use our digital payment platform or even our financing platform when they need it. And we also have very large agencies that might be the subsidiary of multinational carriers or MGAs. So we don't have a distinction between whether we can handle an agency that writes, $500,000 a year or an agency that writes $500 million a year. We have clients across the board on that. So I don't think that there's much of a distinction between how we would focus on that. Why would they use us over others? Again, one of the things I can tell you is that we have significant operational discipline. We do what we say we are going to do when we say we are going to do it, and if we can't deliver, we tell you why, and then we tell you when we have to push the date. So I think what people have with us is sincere, honest predictability and reliability. We do what we say, we deliver when we say, and if we can't, we own up to it. We don't blame anyone else. We fix it and we move on. So that's how you build a reputation, right? I mean, as Warren Buffett says, you got it takes you 30 years to build a reputation and 30 seconds to destroy it. So I am very vigilant on making sure that we do what we're going to say and we own up to our mistakes. And I find that, if you make a mistake or something gets delayed and you tell a customer and you're upfront about it, they trust you, because this is all about, all business, anytime you want to sell something to someone else, people don't buy from people that they don't trust. Mm-hmm. But in the insurance business, it's even more like that. Like, it is absolutely trust-based. If they don't trust you, you are never getting them as a client. And so I know that. That's what I teach all my folks. That's what I preach all the time. And that's fundamental to who we are.
So let's talk a little bit more about premium financing. You touched it before. You talked about what is the need, how it's impact the different cash flow and stuff like that. Let's start with the most basic elements, so people who are less familiar or more familiar can kind of later on chime in with different questions about that. What is premium financing? Why do we need it?
Premium financing is a specialty lending business. That's basically it. You're making a loan. Mm-hmm. The reason that people need it, about roughly, just to put it in context, about 10% of all property casualty insurance premiums written in the United States are financed through premium finance businesses. Okay. The reason they need it is what we talked about a little earlier, which is the fact that there's sometimes when the policyholder finds the right product at the right price, but the carrier does not offer a payment plan because the economic development and delivery of that product requires them to have the entire annual premium up front so that they can offset their underwriting losses and overhead with the investment income. That's one reason why.
Usually they will also offer some sort of a discount. Please give us the money now, because the carrier wants to have the money in advance as much as possible. They can go down up to 15%.
We don't see that. We don't see that as much especially on the E&S market, which is where a lot of premium financing is done. We don't see significant premium discounts for pay in full. But it also comes down to the fact that even if you offered someone a discount, say you were dealing with a $10,000 policy. So say someone could get as much as a 15% discount and pay $8,500 for a premium. They still have to write a check for $8,500 as opposed to financing a $10,000 premium and writing a check for $1,000 a month. So they're still taking 8.5 months of cash flow and accelerating into month one, which may not be the best thing for their business. Because the other thing that's interesting about premium financing is you don't have to post any collateral for it. If you take a loan out on a car or a home or whatever, or anything, you have to post collateral or sign a personal guarantee. In premium financing, the collateral is the unused insurance premium. So if I make a loan to you for your auto insurance premium, when you sign a loan agreement with me and agree to pay a down payment and monthly installments, you're also giving me the right to cancel your policy if you don't pay me. In which case, I can issue a cancellation to the carrier and collect the unearned premium, the portion of the insurance you have not used, directly from the carrier. So I don't need any collateral from you. So it's a way to do almost like an off-balance sheet loan.
Bad. Actually, that's a good way to look at that. So is it more on the business side? You said DNS. Do we see that also on a private, on personal?
Yeah, I mean,
lines?
to a lesser degree, you do. A very common place for premium financing to be associated is when you have assigned risk plans. So, when you have state-sponsored automobile plans, the insurers of last resort, whether it be the California Auto, CARP, or the NYAIP, or MAIF in Maryland, all of these state-sponsored auto insurance facilities for people that can't get insurance elsewhere. Those are very commonly utilized, very commonly utilized premium financing. Also, high value homeowners down in Florida. So folks that are buying homes and paying $100,000 a year for homeowners insurance will oftentimes buy those through the E&S market, Lloyd's policies perhaps, and then they will finance those, and they will finance those as well.
No, it's almost impossible to get something something admitted here in LA or in Florida. If you're coastline, forget it. Here, if you're in the wilderness, even Malibu is the wilderness here.
That's right. That's funny, right?
Are you kidding me? It's funny, but not funny. And Malibu, which you think about it, that's basically in the. Actually, come to think about it, even part of Bel Air will be kind of in the woods here, although they have less fires. Next to the Getty, you'll see a little bit more. And they had actually a few years ago a major wildfire.
I remember it wasn't.
No, it wasn't wildfire. It was one of those
controlled burns, maybe to keep the fire away, or something else.
No. It was someone threw a cigarette, or it was one of those gender reveal parties. I think that was that kind of burn half of California.
Yeah, I remember that.
Parties. Who can stand between that and burning down the sixth part of the sixth biggest economy in the world? But in the little. Brilliant. So, E&S, personal lines, business lines mainly, and that will put them into an interesting balance. What do you think is, the calculation for the different CFOs of those companies when they're looking at that? Or no, it's a.
I would just say that it's a matter of capital efficiency, right? Yeah, that's it. Because if you think about it, if you're getting charged a rate of X, you're only going to pay 60% of that rate, because you're going to get probably between state and federal, you're going to get a 40% tax deduction on the interest charge. So you're already getting a pretty significant discount to the interest payment that you're making. And if you find that and it also depends on your opportunity cost of capital. Some companies can deploy capital and get a return on that of 18, 19%. Well, if you can borrow money at 8%, then you have to buy a $100,000 insurance policy. Why would you not borrow it at 8% so you could take that $100,000 that you don't have to put into your insurance and deploy it where it needs to be deployed for an 18 or 20% return? So there's all sorts of reasons why it makes a lot of sense.
Let's change gears, talk about building companies and stuff like that, because otherwise I will completely run out of questions, and try to have a little bit more of a conversation than just listening to numbers, which, frankly, that's the best thing about this podcast. Hearing people and the numbers. I think that to understand a business, you need to get into the small details about, what is the percentage, how much tax, all the different calculation, as you just said. And kind of, I wasn't really happy with my own question for the CFOs, but you need to know how to make that calculation, and the cost of capital, which is critical, especially when you have all the different small tweaks that you can play with as those small parts are moving your way. And understand that, great. A little bit more editing for this episode, which will not happen. So people will know that it's real, and we haven't cut that alarm clock. Why the hell do I have an alarm clock for 10:30 in the morning? Well, that's when I wake up, 10:30.
I was about to say, that was your alarm to wake up, because you're a late night guy.
Yes, of course. Yeah, I wake up at 10:30. Go do a spa, then I wish I'm up a little bit earlier than that. At this point, should be my third coffee or something like that. But so, how long have you been running Input One?
40 years.
40 years. You don't look a day older than 60.
Thank you. Thank you.
Ah, you're welcome. You're welcome. No, well, you've been running 40 years, seriously. You've been running Input One.
I probably running it more like 35, but I've been working here for 40 years. My grandfather started the company. He hired me when I was 16 years old to write the code to run the business. And that's all. And I've done this and waited tables. Those are the only two jobs I've ever had. So I have legitimately been here since 1984. I built all the initial code. And then I hired my brother 6 years later and turned it all over to him and taught him out. And he's of course been building out the IT department, quite substantially over that period of time. And so I have been legitimately here for 40 years. We're a bit of an odd duck in that we're a 40-year growth company, because I spent a lot of years. I made a conscious decision to not grow the business dramatically because I wanted to be there for my family, because I have 3 kids and I was there for all their soccer games and all their parties and everything. And I was not flying around all over the place. And then once they graduated college and started developing their own careers and their own lives, I decided, you know what, let's invest back into sales and marketing, and then let's watch this hockey stick happen. And that's what's been happening over the last 3-4 years.
Okay, so your grandfather started it. Now, I hear that from insurance companies, mainly from agencies and brokerages, second, third generation insurance. But you're basically a billing payment solution, premium financing. What was the first? What was your grandfather's business, and did it skip your father?
Yeah, well, it's my maternal grandfather. So yes, it did.
Your mom.
So the business started out, my grandfather owned an MGA in the 50s.
Okay.
Then he noticed in the late 50s, early 60s that a lot of people were financing premiums. And he said, he was your traditional entrepreneur. Hey, if they can do it, I can do it. So he started a finance company back in the 60s. I think the only finance company, there was like 2 finance companies, AFCO and Cannonwell, names that you may have heard of in the industry. And so he started this finance company to finance the premiums that his MGA was selling. And then the finance company grew so fast that he just sold the MGA and kept the finance company. Then ultimately in 1979, he sold the finance company to Wells Fargo Bank and stepped away. Wells Fargo didn't keep that business for long. They didn't really know how to run it correctly, as I'm told, and they didn't keep it. But what he did is that after that, he spent a couple of years in retirement. By this time, he was in his 70s. He said, I know this business. Banks have lots of money to lend. It's a very unique asset. I'm going to start a consulting business to help banks run premium finance portfolios. And that's when he hired me. And we built the software program for the purpose of doing that. So we started out as a tech-enabled, what we called back then an outsourcer, right? But now you call them tech-enabled service providers. We were a tech-enabled service provider to help banks start and run premium finance businesses. And that's where we started. And then after that, I packaged up the software at some point, and I started selling the software to the premium finance industry. So now I could provide services or software depending upon the disposition of the people to insource or outsource their business. We are still today the largest premium finance software vendor in North America, from everywhere from Canada down into the Caribbean. And then I started my own premium finance company about 5 or 6 years later. Then I said, gee, we have this premium finance business for software and services, but we don't do anything for billing. And so much more of the universe pays their insurance premium through billing than they do for financing, because we're only touching 10% of the addressable market. So I then modified my systems to be able to do billing. And that's when we went to the insurance carrier and MGA market and said, now we can get rid of all your legacy issues because our software systems are in the cloud. They're updated all of the time. We have tremendous operational discipline. We can run this billing program for you. And I always say, it's my pitch that says the highest return on human capital for any element of the insurance vertical is to build and sell great insurance products. That's where you're going to make the most money. So let me do all of the drudge work. Let me do your billing and payments, all the stuff that's rote that needs to be automated, and let me focus on all that because that's what I do and I'm really good at it. You go get a high return on capital for the people that you have spent a lot of time investing money into and hiring and training and so on. And then I noticed that as we were building this out, that standalone payments started to become a business. As you mentioned, a couple of competitors earlier, we had already built a payments business because you can't build a billing business that's going to take payments without having digital payment capabilities. So we had digital payment capabilities inside of our billing operation, and we extracted them out for people that just wanted to buy the payments piece. So that leaves us with what we have today, which is a tech-enabled business that provides a back office operation and the technology to run a finance company, to run a billing area, a premium finance software application, a premium finance company where we actually can balance sheet the loans, and a digital payments business. That was the evolution.
Okay, now we're going to take you a little bit back for the basic stuff, right? Which will be, what's the difference between the payment system, the billing system, and if you have a little bit of a bigger insurance company, they may look also at treasury and investment. Each one is a completely different approach of a system and the business attitude. How does it reflect for you? Or let's start with the basic. What's the difference between payment and billing? Silly question, but it's very basic.
Not silly at all. When we provide a digital payment platform to someone, it's essentially the ability, it's a portal for an insurance agent or broker or a policyholder to make a payment, either a full payment or an installment payment to the carrier in a digital fashion. That is an ACH, that is a card payment, credit or debit, that are the wallet payments through PayPal, Venmo, Apple Pay, Google Pay, that type of thing. So we provide, everything that we do is white labeled, by the way. Nothing says input one on it, because our promotion is we're going to put your name on everything that we do. So nobody really knows who we are other than our customers, but our customers don't know who we are, and we like it that way. It's simply a digital payment platform. You can log directly into the platform, or we can provide a link, or we oftentimes embed it directly into the agency management system or embed it into the policy issuance system so that people can make a payment. But it is simply a manner in which we transfer money from a policyholder to an agent or broker to the insurance carrier or the MGA. That's digital payments. Now, digital billing has payments also as part of it, because clearly if I'm going to be issuing invoices to someone, I have to have a mechanism to collect the payments. So when we say digital billing, I always say digital billing and payments, because they really are, they're embedded together. And what that is, that's significantly different. This is where we take our software systems with our client-facing APIs, integrate them directly into the core policy issuance system of the MGA or carrier. And when they instantiate a new account or a new policy, that data gets dumped into our systems, and we will then onboard that as a billing account. So we send out a welcome notice to the policyholder. We send them out a description of their payment schedules and how they're going to make their payments. We give them all the credentials to log into the website to check the status of their policy payment. They can look at a lot of data on the system, but they're looking at their payment schedules. They can go online and say, send me text message reminders 5 days before my payments, or send me my invoices by paper. They can update and change their banking account information or their payment information. And we are then sending out an invoice. We're sending out a notice of intent to cancel, a notice of cancellation, a notice of reinstatement. If the carrier has changes in the policy premium, they download that data to us, ingest those endorsement materials, and then we update the payment schedule for the policyholder. And then if the earned premium is greater than the collected premium at the end of the cycle, we issue all the refund checks out. Our refund, we send it all digitally. Or if the earned premium is less than the collected premium, we will go through a collection effort and work with third-party collectors to actually grab the rest of the premium. We also pay all of the broker commissions as well. So we really relieve all of everything to do with that inbound dollar of premium, how to get that dollar, right? How to send out all the notices. And remember what this means. It's very sophisticated. It means that you have to send out notices. If you're writing a work comp policy in Oklahoma, you have to have a different notice than if you're writing a GL product in South Carolina. The notice for pre-cancellation is different. The cancellation notice is different. The type font is different. The language is different. And it all has to be garnered and built into the system correctly. We use the Odin database to get all of that. So therefore, the carrier doesn't have to worry about all this compliance issues. We've also removed all of the PCI data out of their networks, because we collect the payment information and store that in a tokenized fashion with our token vault. And so we've relieved them all of all of these things. And then when you think about why is this so good for them? Why do they want to do that? How many carriers are dealing with legacy issues? So many of them are. Even the new systems that they buy today, whether it's Guidewire, Duck Creek, Majesco, they're going to become legacy issues at some point. They're going to have to buy new additions. Not with our systems, because embedded in our platform is the fact that we are updating this software program every single month. Every month, we're fixing bugs we know about. We're creating new options, and while we're doing that, we're taking, okay, hey, you know what? This system is starting to get to the point where we need to rebuild it, and we're in the process of rebuilding it now. Now, it might take us 5 more years to rebuild it. We don't have any constraints on our existing product, but you always want it to be on the latest platform. So when we do all of that, and by the way, we do all of that for a fee that is less than what the carrier charges the policyholder for the installment. So imagine if you outsourced all the operational elements of what you do, all the technological elements, never have a legacy problem again, and make a profit doing it. That's the elevator pitch on the billing side. I know you didn't ask me for that, but that's what it is.
Oh no, that's great, because you just ran through a few different points there, which each one of them is a completely different conversation. Beside the fact that I'll give a little bit of an auto guide wire that they are already a type of a legacy. And when you think about the latest political movement here in the U.S., every insurance company should consider to have some sort of a Dodge kind of a department, and kind of look
right.
into the different things that they have. And the cost of having COBOL running or a mainframe, and not to this IBM, because they tried their best to create all kinds of Java wrappers around their mainframe and different solutions that there is. It's a patch. But how many COBOL developers do you have? Not too many of them, right? And moving with the time, and it's been like 40 years, if not more, to move with the time, it is still a challenge. And there are more and more challenges over there within the insurance industry, and of course with any type of industry. Now, you looked at payments, the billings, and the other way around, which is great. And then when we are looking at different bigger insurance companies, they go like, okay, great, but I need also to connect it to my investment or treasury. And I remember when I was with the farmers, we were looking at a new payment solution. So that's been a few years ago, right? Maybe, God no, 2017, maybe. So it's been a few days. And one of the kind of the folks that were like against or for there, of course I cannot provide too much information about that stuff, but it was very interesting to see the different incentive that those business units had from the folks that were responsible for printing the checks to those who were like, wait, but that will cost me, 0.5% more in commission. And 0.5%, when you're dealing with billions of dollars, that's a lot of money. So
You're right.
Efficiency and having this solution versus the other is critical. And can you provide that, that little margin and improvement, and you think, oh, that will be better to my policyholder, but that, that improvement will be tens, if not hundreds of millions for the insurance company?
That's right.
That's when the business go like, let's just stay where we are. Don't make any changes unless it's really cheap and there is someone in the room that, let's say a COO or someone like that has a bigger view or can see the bigger picture, wider view, can see the bigger picture and go like, yeah, but we're going to save XYZ. It's going to cost us here ABC, but at the end of the day, we're going actually to make more money or to save more money. It's not that straightforward when most of the companies that we deal with are focusing on one thing, or a business unit looks on one thing because that's their incentive. Sorry for going through a different rabbit hole here.
No, you're right though.
It doesn't matter if I'm right. It's more about hearing what you're providing to your customers and how they're actually benefiting from it.
Well, I can tell you this. One of the things that I've learned is that operational, we all talk, everyone talks about technology, and technology is super important. And I think we have great technology and our clients love our technology, and we're going to continue to develop it and expand it. But what I've learned is the amount of operational discipline that I think is missing in this space. It takes a lot to put the pieces together and build the workflows where the technology can interface with the human beings and can interface with the customer, the human beings or the employees of the company and the customers. When we implement our customers and we sit down and we walk them through, how is this going to work and what are the benefits going to be? And yeah, you're going to have to make some changes and you may find some of these a bit painful. I'm it's remarkable to me how much operational discipline they don't have, or they don't choose to execute on it. So I like to think that we don't just deliver a great product and a great platform, we make them better, because we are going to make sure that the money goes into the right places. We are going to make sure that it gets there faster. We are going to make sure that their customers get their answers faster through technology, as well as the operational aspect of the business, where we're picking up a phone and talking to someone, because always you need to do that. Insurance is not a simple thing. It's not like I'm selling you a plastic cup and that's it. You either like the cup or you don't, or it breaks and you buy a new one. That's it. That's not what we're selling here. This insurance policy involved is a relationship, and it lasts for a year, and there's moving parts in it. And the operational element of that is critical. So we're super good at that. And I think that makes our customers better, and it makes our business sticky, because when they rely now and have become accustomed to an elevated level of operational discipline and execution, they don't want to leave, and we don't want them to leave, obviously. So that's an important element of it.
Again, listen, earlier you just buzzed through a couple of things that are all about convenience. Stickiness is important. That's actually, from a business standpoint, that's the most important thing, so you can have recurring revenue. But only the fact that you are the one who is dealing with compliance, you're the one who is dealing with, as you mentioned, the font format for this state versus the other state. The fact that you're taking this on is such a convenience, and there is so much cost of following and understanding. And if it's hard coded somewhere on the carrier side, or an agency doesn't know how to deal with that unless they are living in that specific state and they have maybe 2 states or 3 states. But once you're going national, and you need to make sure that all those moving parts, you know what's going on with them, and you're taking care of that compliance and the small, that's the very hard to quantify value proposition. I think that conveniency is one of the most hardest thing, kind of if you call it almost a goodwill in terms of the value. It's that intangible value that you can add to a company. That's brilliant. What other kind of conveniency features do you have?
Well, I mentioned earlier the broker commissions. It's really interesting. If you talk to brokers, you will find, I mean, we have found historically, we've done a lot of market research on this.
So hard.
A lot of them just get the money from the carrier and they have no idea. They say they will habitually tell you, I don't understand my statement. I can't read it. And they're frustrated about it. They can't reconcile the dollar amounts to the reports that they're getting. So we made a concerted effort to make sure that the reporting that we deliver to the agent, the digital reporting that goes out with the digital money for their commissions, goes out. Again, it goes out reliably. Brokers are if you tell a broker you're going to get commission payment on the 25th day of every month or the first business day after, if it comes on a holiday, and you don't do that, they are going to call you. They're going to scream about it. Brokers have a very low tolerance for action, and that's fine because it makes us all better, right? So we are held to that level, and we're really, really good at that. So I can tell you that the brokers that place business with the MGAs and the carriers for whom that we provide these services are very happy with this, and they tell us consistently, your reports are clearer than any reports that we get from any insurance carrier, and they always match the dollars that you send. And if we call you with questions, you answer them. So to me, that's a big issue because there's a big load on that. And I think that's a significant, whenever I tell folks that, we're digital billing and payments, but by the way, we handle all your broker communications and your broker commission statements, then you see their eyes light up because they know, like you said, it's not an easy crowd to deal with.
No, it's not. I didn't say that it's not an easy crowd. I said that it's not an easy task to deal with. A small differentiation, no, because let's say an agent it's the people versus the system. Let's say an agent has on average 10 appointments. He writes a few personal lines, and then a carrier will give them a check in different commission. A few will go for plus 45 days, 60 days, the check will show up. Then you have the incentives and the bonuses based on how much you've written. And the worst one will be, but your book hasn't been the best, so we negotiate you down from 15 to 12 because you've been writing bad risk recently. And then it's a question, how do we take that to the claim side? But in the meanwhile, who is following all these small or fraction payments, or is it billing? Is it payment? It's payments from the carrier side, but maybe it's billing from the agent side. Really depends who is your client. So if you can have a clear, it's not a balance sheet, but a clear status of the current what and when and how much I'm supposed to be paid at the end of the month, that's a winner.
Yeah, I agree. And it's just a matter of saying, here's the policy, here's the premium, here's your commission, here is the endorsement that raised it up or down, here's the plus or the minus commission. It's actually not complicated, but I think honestly, a lot of the reporting and the mechanisms used to provide information and visibility to brokers on their commissions were built by computer people and not insurance and operational people. And I think that's one of the things that we've changed the paradigm on, because our folks would look at it and they know they need to explain it, and we made sure that the developers built what the business needed, not the other way around.
Okay, Todd, we are reaching the end of our episode, and sadly, I do appreciate your time, and sadly, from all my technical stuff and challenges here, let me ask you the same question that I'm asking everyone at the end. Any word of advice to entrepreneurs or other business owners who operate in the insurance and InsurTech industry? Or what type of advice you will give yourself? Well, you got it. It's like, should I bust tables or should I work for my grandfather? Not the best.
No, but you know what? I do have advice. I mean, listen, I've been doing this for a long time, and I started from a business. It was me and my grandfather and my grandmother, and now we got a couple of hundred folks here. So yeah, I've seen all parts of this evolution. So they talk about the fact that you can't be successful unless you're willing to fail. I think most other entrepreneurs that start from the beginning is they don't realize how many times you have to fail and how many walls you have to run through to be successful. And so I think perseverance is the most important thing you can have. I always say, if you have the right people doing the right things, you will have success. I can't tell you if that success is going to take this long or this long, but you will have that success. And so I was not prepared, looking back on myself 35 years ago, I wasn't prepared for the degree of perseverance and the amount of failures that I would have to confront to finally be successful. And so what I would say is, if you know you're doing the right thing and you know you got the right products and the right services, keep going. No matter how many walls you have to run through, no matter how many no's you get, come to work every day, put your nose to the grindstone and do it, and you will be successful.
Awesome. Amazing. Todd, thank you very, very much for joining me today, talking about Input One, your journey, your one. We didn't talk about your music, and we didn't touch, is that Churchill and Seneca? What do you have there behind you?
I have books from all the museums I've traveled to around the world. I always get a hardcover book from the museum that I go to. So that's the Churchill Museum in London, right? Yep. There's you can see the Titanic Museum from Belfast, so all of these places.
I can't really see it because it's out of the frame, but yeah, awesome. And of course your kids.
That
and
one right there.
That one over there. Perfect. Have the one from there again, and not music. Cool, wonderful. Todd, thank you very much. It was a pleasure chatting with you. Cheers.
Gilad, I enjoyed it very much. Have a good rest of the week.